Good evening. Ira Epstein with your financial market wrap-up. And this wrap-up is for the evening of Tuesday, the 12th of November, 2024, 6:50 p.m. Central Time, at least getting on to it. You know, the one thing I keep looking at are the bonds and notes. They're relentless in adding higher yield. Now, tomorrow we do get CPI. In fact, saying that, maybe we should go right there. You're going to get the mortgage market numbers at 6 a.m. I can't imagine they're going to be very pretty. All we keep doing is seeing interest rates go up. But we do get consumer price data, and that's going to come out at 7:30. And then in the afternoon, we're going to get API numbers. We're hearing all the way through President-elect Trump is naming people to the cabinet, one job after the other. Most are very hawkish, so very much in line with his policy, which you would expect he's going to do. I'm waiting to see, what does he do with Robert Kennedy? Does he really take him on in health? He's not a popular figure for that, doesn't believe in a lot of the medicine that we all take. So we will see. That's going to be the interesting payback one, and we will find out. All right? But each day we're also hearing now, and we'll hear tomorrow from, I think, 4 or 5 of the Fed members, their points of view on what's going on in the economy. They're going to stick with the idea that they're data dependent, but they've got to understand the earnings season has come to an end. We're right at the tail end. Companies did very well overall. The stock market made new highs. It's just getting its first correction of any size from the rally off the presidential selection. And we had a break today. We're getting another one. And as I said yesterday, expect Tuesday reversal after a big gain on a Monday. You got it. It did not happen, though, if you looked at that in the metal markets in any manner. I didn't see that take place. Energy markets faded late in the day, and they're still fading away. I think you're getting up to a top area in natural gas. The first cold weather of the season often causes a rally, and inevitably you hear, well, that's going to cause drawdowns. Yeah, and that's correct. The problem is, look at the size of the supplies versus prior year. And you've got plenty of gas in there that you could afford to draw down. Getting in these interest rates, like the 10-year note at 4.43 today. I mean, these are high numbers. Are we going back to 5%? Don't know. All right, but you've got to take this all into consideration because it does weigh on the market. You've got a powerful dollar that's gotten up to the 106 area. It's broken down a number of currencies against it. Our goods are going to be very expensive. It means when we buy, we're not importing inflation, but when people buy from us, what happens? They have a whole different story. They are, because the dollar is so strong. So this all has to come into play and roost. There's a lot to digest tomorrow in CPI and a lot to digest when we get PPI on Thursday. So keep your powder somewhat restrained right here until we get a better handle on these two numbers. They'll lead us into the jobs report at the beginning of December. The probabilities are still, the swap traders are saying they're still good for a rate cut in December. I am uncommitted on it, and very much uncommitted this time. I just look at how real rates are. Real is right here to me. That's the real rate, what the market is actually trading at, not what is the Fed going to do. If the Fed cuts and this market keeps adding yield, it's like throwing a cutaway. It doesn't make any sense. And if inflation's climbing, and I'm not saying it is, but if CPI and PPI come in strong, why are you cutting rates? You should be raising them, making money, just what the market is doing. So much more expensive that slows things down. We'll see. When you look at the S&P for a change, we're talking early on, 3 days into the week, because tonight's one of the days we're actually down 3.34%. I'm shocked. Absolutely shocked. You can see on the daily chart that you peaked out on Monday. Today's the down day. Maybe you get a little bit of follow through here. I certainly am not calling a market top. You might want to. I can't do that. The pattern of the chart, you can really take this red arrow and move it up there. I didn't do this for that, and I should have. But The market is looking to me like trading tops are in place in the market against the Bollinger Band. I am not bearish. You are not hearing that from me. Don't think I'm saying that. But that pressure and the market pulling away means you're probably not at this level going to just start the embedded reading. You're fighting, in fact, tonight to keep one of the numbers over the 81 level. If the market's down tomorrow, let's say it were down 30 points, you probably take the blue line and keep it away from going into a day of embedding. In the NASDAQ, same type of thought. You were running there, you're backing off now a little bit, and that's all you can say. The trend is clearly up in this market. Another one of these markets where I missed moving the red arrow should be up there. You've got a lower low and a higher high, and you're getting a correction. Big deal. You're overbought as can be. In the Russell, still very much in the uptrend with higher lows and higher highs. I apologize for not moving those arrows. When we come to the 10-year notes, you can see how the market is still in an oversold condition. It tried its darn best to get up and get something going. The last break low was here. And I still don't expect normally for that to be taken out without prices hitting the 18-day average. Probably have to wait and see the CPI to see if that happens. Same thing here. And we can even take a look if I can get it to back off. Did it take that out? And that's what we're going to look at right now. And that'd be one of the few failures you get on these. So the number should not have taken out was 106.15.5. And the break low through now went to 106.13.5. You can't really tell by looking at that. That's a complete failure. So the market's probably really set up to go to the Bollinger Band again. When you get these percentage trades, when you lose an embedded reading and you can't get up there, big problems. To me it is. In the dollar index, you're now just running that upper Bollinger Band, pushing it out, but not even trying to embed. So I don't think the embedded stochastic is going to come into play before you get a correction of some type in the dollar. And in the eurocurrency, same thing on the downside. So at any point here, you can get a bounce in the marketplace, but it's going to be in an oversold condition. It's not the ideal setup that I like. British pound sliced through today the 200-day average in the Bollinger Band. Now, the odds don't favor it staying under there for very long, but this is bearish action, still continues to be. And you'd have to go to price counts to see where these next markets are. I did my price counts today. I don't know what I'm going to do with them for a special report. I want to do a special report by tomorrow. I'll see. I'll see what my time looks like. I wanted to get CPI out of the way. I think it's an important thing. I've got the presidential election out of the way, and then I'm at least getting into inflation numbers. The Bitcoin, riding the Bollinger Band, been doing it all the way through, and it's going to force the hand for an embedded reading. The first break under there, where as long as the red line is not under 79, I think traders are going to gobble it up. In the Brent oil, lower highs, lower lows, still very much in the bear camp. Not so in WTI. You've got a higher high, lower low, just sort of swinging and following whatever the Brent is doing. Same thing in heating oil, higher high, lower low, back and forth action, nothing exciting. And natural gas, I was hoping it would get further up here. I've got my doubts that it's going there. Wouldn't be surprised if you're back at 283 and trying to figure out what to do in short order in the market. So that's pretty much what I'm seeing in them. I want to get the CPI behind us all. I think that's going to be real important. If you were to ask me, what do I think the market's going to react to tomorrow? That's exactly where we're going to be. So as I'm leaving you, you can see where you're at. No big moves just yet. They could happen first thing in the morning. Protect yourself, or come into the market after the CPI and try to grab it and see what you can do with it. I'm Ira. You have a good evening.